Thank you very much, sir. All right, time now for our financial focus, and analyst Steve Budin joins me here now. Good news for Vegas resorts, certainly really good news for people who work in the resorts.
Yeah, this was a great report. 2017 was the best year on the Strip and downtown in many years. Clark County, the resorts really knocked it out of the park. I mean, net income, depending on the property, some were over 100% higher than the year before.
100%.
Yeah, fantastic. And all across the board, the gaming revenue was high, the non-gaming revenue was high, and it was just a stellar report.
Well, you think about this really in the context of the 1 October shooting, and you had to sort of anticipate, well, maybe the numbers may be down a little bit this year, but now that puts these numbers into a whole new perspective. It's just about how powerful this economic engine is.
Yeah, slight downturn after the tragedy in October, but for the year, everything was great. A couple of interesting points that I thought. The slot machines are still the #1 generator of revenue, not to mention all those other table games, but people still love the slot machines.
Still love the slots.
And July was the month that had the highest room occupancy.
Right.
And I never would have guessed that either. So the casinos and the resorts are so good at marketing. They know what they're doing. To fill rooms in July is incredible.
Yeah, perhaps better airfares and hotel and all that stuff.
Whatever
okay, we're going to move on now to the stock market. So far, banner year here. I mean, just kind of picking up where we left off.
Yeah, and it's funny. I sent over the report to you guys this morning. That's where we were when the market opened, and it has since actually lost all of those gains. But for a year start, this is as good as it's been in many years. And there's, I think, a couple of reasons. The tax package, and there's just general feel good about the economy at this point. A lot of these publicly traded companies are announcing bonuses for their employees. 401k matches are coming back. So there's just a general good feeling inside the economy.
And of course, President Trump taking some credit for this. How much is that truthful or not? I mean, can you tell really? Or
you really can't tell. I said this a couple of weeks ago that presidents are like baseball managers. You know, they get a lot of the credit, they get a lot of the blame, and both are not necessarily as accurate. Of course, Trump's going to take the credit, but not all of it is his.
Yeah, who knows?
Good timing more than anything.
Moving on now to short-term interest rates. They are going up. This is not good news primarily for people with credit card debt. Of course, we're just coming out of the holidays. A lot of people right now are looking at those credit card bills. So this is something that could impact their wallet.
Yeah, this is a good news, bad news scenario. If you're a saver, you now actually have short-term interest rates on Treasury bonds. 6 months, 1 year, 2-year interest rates are actually the highest they've been since 2008. So you're looking at interest rates the highest they've been in 10 years on the short end. Unfortunately, if you're a borrower and not a saver, the short-term rates dictate what your credit card interest rate's going to be. So now you're seeing some credit card bills and some interest rates begin to go up. And it's not anything to be overly concerned with yet. But if they continue to climb a little bit, I think it's going to be a concerning factor for a lot of folks that are trying to get out from under this debt. But if you're a saver, shop around. The interest rates on some Treasury bills are really looking good.
All right, as always, it's always good to save, and it's always good to see you, this time on a Tuesday.
Yes.
Thanks to the holiday.
Change it up for you.
All right, sounds good.
Sure.
Steve Budin, appreciate your time. We'll be right back.